All right, good morning, everybody. Today is Wednesday, May 15th, and welcome to another weekly edition of the Investing Systems Trading Service live show. And my name is Bill McKinley, and today I am going to be doing the show solo because Jeffrey has another commitment this morning. So no big deal. I figured I would jump on here and do a quick live show, look at some charts, look at the market, answer any questions that you may have, and just sort of wing it here. So we're gonna get started here. Let me first bring up a chart of the S&P 500. Which, as you know, has been sort of in a little bit of a state of turmoil here recently. We've had some crazy price action, and most of it revolving around the news headlines, right? I mean, that's been what's driving the market. It's been the crazy news headlines regarding the trade war with China, and boy, look at this. We had this big gap down a week ago Monday, right? Here's something interesting before we start talking about the trade war with China. Check this out. This peak right here, this reversal day in the market, right? If you go all the way back on the chart to, got to go all the way back to last October where the market started falling, right? I'll put a line up there. So those were the previous all-time highs, and it's been a crazy ride from last fall, right? 20% correction, and then rallying all the way back, making a nominal new high. I mean, that's about as nominal as it gets, right? As far as getting up to new highs, and of course, they got all excited on financial TV. But this particular day here, I don't know if you guys remember this or not, but that was the day that Federal Reserve announcement came out, right? So that was Fed Day, and amazingly, and it's kind of a reversal day, right? I mean, the market had just made a nominal new high, and Chairman Powell came out and said that the Fed was going to leave interest rates unchanged, and which of course the administration started sort of pimping them to lower rates, which seems kind of crazy. I mean, there's just everything in the news cycle these days is just crazy, right? So, I mean, Kudlow come on TV saying that he thinks the Fed should cut rates by 0.5%, and you got Trump tweeting that the Fed should be easing and all this kind of stuff, and so I mean, there's just a lot of wacky stuff going on. But anyway, the point I was about to make here was that that particular day, which was, the market, the S&P anyway, opened at the all-time high in the history of the world that day. It was Fed Day, and it had a negative reaction. And the funny thing is that over the years, other Fed days have actually sort of, sometimes right. I've seen other Fed days that actually marked sort of a reversal spot in the market, right? Like the market was sort of headed one direction and then into Fed day, and then after the Fed announcement, it would reverse direction. And so it's not like we haven't seen that before. And the other thing I was going to say is, way back over here, um, I don't remember which one of these days it was, but it might have been this one in the middle here, right? Like that one on 926. You can go back and look, but one of these days, right near that top, was also a Fed day, and so it's just kind of interesting. But and this is a little bit ominous of a chart pattern, if you ask me. It just is. But so for the past couple of weeks here, we've had a lot of turmoil, and most of it's been based on all the uh, all the back and forth sort of nonsense. Administration talking tough with China about trade war, no deal being made, even though they'd been hinting for months that a deal was imminent. And so there's just a lot of wacky stuff kind of going on now. And interestingly enough, this sort of zone here that I've had on the chart for a long time. Obviously, this was a resistance zone back here, and yeah, you could make it. I could make the zone a little bit thicker. At one point, I had it a little bit thicker to take it all the way down to. It might not be a bad idea. Take it down to, because this is actually really interesting. If you zoom in on the chart, which is, I know it's hard to kind of see on the screen there, but so check this out, right? So this was sort of the resistance zone. After the initial sell-off last fall, you got the first bounce and another leg down, and you got the second bounce that took it right up to, the top of this zone, which is about, I call it 28.15, right? And so right there, another sell-off, and then this bounce, the high on that was 2800 even. Actually, 2800.18. That was on December 3rd. You can see it up there in the left-hand corner. So, 2800 is like sort of a big level, right? And so this was the resistance zone. We had the big sell-off. And then, of course, over here, market ran right up into, pretty much a straight line up into that resistance zone, little sell-off, kind of waffled around it. But what's the most interesting thing is this particular sell-off that we've just had here. The low on Monday, just 2 days ago, was 2801 and change. And so you can see that this is sort of trying to act as support right now, right? That's sort of the main thing to watch. These couple of little tiny, I mean, this wasn't much of a dip, but there was a couple little tiny dips here, and so the lows down there should be something to watch, because if we take out these lows, then you got a little bit of a lower low. But anyhow, the bigger picture here is a little bit ominous, because whenever you see, we had this big run up in 2017, the end of 2017, and then once you saw it sort of make that turn, it wasn't good. I mean, that was a big fast drop. This peak is a little more similar to this one, although we haven't seen the big down day yet. Maybe we don't get a big down day. Maybe we stabilize around here and work our way up. But regardless, whenever you see like these sort of peaks like this, and you pull back, then you got to sort of stand up and take notice. Um, and so that's the S&P. One of the things I want to look at was really interesting, I think, is the Dow weekly chart, right? And we looked at this, I think, either last week or sometime here recently. I think it was last week. The Dow weekly chart to me is really interesting, because I don't know if there's such thing as a triple top or not. Everybody's heard of a triple top breakout, or a double tops, triple tops. And so the most interesting thing about this particular chart is that where I have this zone drawn up here, which is, and this is a wide zone, 26,642 to 26.7 something. But anyway, I mean, it's pretty clear on the chart that this is sort of like a major resistance level, right? We ran up to that level, back at the end of 2017, and it got rejected. And it ran up to that level, last summer and September, tried to poke through it, got rejected. Ran all the way back up to that level, and is at least for now, is sort of getting rejected again. So that's a little ominous. But the other thing that I notice on this chart is, pull this up a little bit. Whenever I look at this Dow chart, and I know the Dow, I'm not a big fan of the Dow or anything, but I'm just pointing this out because it's interesting. Look at that MACD cross, like, I mean, it crossed sort of right after the market sold off, and that's because there's lag, obviously. So that was sort of out of the blue, but you did get a MACD cross to the downside there, and then same thing over here. You got a little bit of a lag as far as because the market had a big run up, right? And so then it starts falling, and it takes, it took the MACD like, a couple of weeks after the sell off to actually cross over. But look at where you are right now. So that's another potential sort of warning sign that we could be in for, a bit more of a sell off. Of course, you never know. I mean, a lot of people on CNBC yesterday were saying, one tweet could turn this market around. So I don't know. It's hard to, I mean, it's hard to actually think that there's going to be any sort of a tweet, other than an emergency announcement that the tariffs are off with China. So, thing of it is that it's clear now that the administration and the Fed are using the stock market as like the proxy for how well our economy is doing. So, anyway, hey, we could be with that MACD like acting like it wants to cross here, and obviously, if we were to get a huge rally here, then it would just be like sort of a pinch together. If we continue to sell off in the next couple of weeks, and it's going to cross again. So no real magic there, but I just thought it was kind of interesting. And here's that same zone on the daily chart. So you got, in the middle of there, you have sort of a new all-time high. The funny thing is that, when the market, especially the Dow, but when any of the markets make a new all-time high, they get really super excited in the media. And so, that level up there has been major resistance, for the third time. So, down the road going forward, that's going to be sort of the spot to watch. So let's move on here because I think that the Russell 2000 is telling us something other than the S&P and the Dow. Basically what it's telling us is that the small cap stocks, big sell off here and then just rebound, but nowhere near the all-time highs, right? So that's kind of weird. Um, it's sort of like a non-confirming type of thing because typically in a rip roaring bull market where there's a lot of where risk on type markets and that the small caps tend to outperform. And so they basically small caps Russell 2000 rallied up to like that sort of same resistance zone as the other markets and haven't really been able to get through it. And now, threatening to sort of fall back in here. I'm not sure what this is, so I'm going to take it off of there. I might have drawn that here recently. I mean, that looks like probably a decent sort of support level on the downside. And so anyway, here you go. There's a lot of weakness in the market, and a lot of weakness in the market recently, and so that's basically while we've had a lot of stop outs lately. Right? It's just the way it works. And so fortunately, the stop outs have been rather, there's been lots of stop outs, right? Because stocks trigger in, and they trigger in, on some strong days, and then the market has been having these sell-offs here, and then so they either drift down to the initial stop, or the ones that were open that had something going. Well, they just they pull back to the trailing stop, and sometimes that's a little bit lower than the entry price. So it's just one of those things. I mean, the market goes through cycles, and part of it is managing the stops and using stops, and of course, in rough market conditions, taking smaller position sizes is probably the way to go. Oh, look at this! We're getting a big, all of a sudden, just out of the blue, we got a big spike up in the S&P. Huh, that's interesting. So retail sales came out this morning and disappointed, and that's why we had this gap down. As far as, let me check the news here real quick and see if I can figure out. Oh, I see. Trump delays auto tariffs for 6 months. Oh, that's funny. Yeah, I mean this sort of headline driven market. Here's another headline. Mnuchin says we'll go to Beijing in the near future to continue China trade talks. Yeah, I mean it's such a nonsensical type of headline driven market. So, but hey, it is what it is, right? And I mean, boy, it hasn't been that long since this Fed day, but it sure seems like a long time ago. And ever since then, it's been all China trade war headlines. So anyway, let's pop over here and take a look at. I was looking. We had a couple stocks. We haven't had a whole lot trigger in here recently, but we have had these two triggered in last night, HES and JD. And I'm going to take a look at those. Let's see, HES. So I got the trigger drawn on here, and it's a fairly reasonable looking pattern, if you ask me. It's kind of a nice chart, nice sort of short term uptrend. Hess, of course, is we have a Hess gas station here. Hess is a pretty big integrated oil company with gas stations and all that, and it's not an extremely volatile stock, right? And so it's got a pretty decent look to it. Average range 2.3%. That's basically that's a monthly ATR, right? So 2.3%, no huge big deal. Stop's kind of tight here. Um, Stops just under like sort of the congestion over the past week or so. So, but anyways, it looks pretty good. Whenever I look at this, like the trigger and the stop, I always like to. So the average range is 2.3%. Just for the fun of it, let's pop over here to the calculators page, and let's go to the price differential calculator. So if the entry price is 63.85 and the initial stop is 61.85, let's just see what that comes out to. 3.1%. So that's fairly minuscule actually. I mean that's not bad. 3.1%. And so it is what it is. Not a bad looking chart. Nice uptrend. Nice little sort of pullback here recently, and sort of forming a cup. So I think it looks pretty good. It looks pretty good. In theory, and these stops are calculated by the system, right? And so the system is saying, hey, let's use a really tight what did I say, 3.1% stop on this particular trade. In theory, when I just eyeball the chart, and of course, the system itself, the back end system, is doing calculations based on price ranges and all sorts of different things. But when I look at the chart, I think to myself, well, geez, that almost looks like the bottom of the pattern. So I wouldn't be inclined to second guess it, but just for the fun of it, that low is 61.12 right there. So I just want to see 61.12. I want to see what that comes out to. Yeah, 4.2. That's still fairly reasonable. So, this is me sort of, and like I said, I would not be inclined to second guess it, but obviously, there's the potential that you could look at this chart and say, well, yeah, it's a nice uptrend. It's had a couple of pullbacks, and You know, like what it's reminding me of is like this little pullback here after this consolidation. And so, hey, you know, a stop down here, 3.1% stop or a 4.2% stop would be at the bottom of the pattern. So I'm just going to leave that on there just for the fun of it. Jeffrey would say, if Jeffrey were here, he would say, follow the system stop, don't second guess it, whatever. So I'm just having some fun here, right? Anyway, hey, not a bad looking setup, right? Not a bad looking setup. Looks like it's starting to cup up, and so if it breaks these recent lows, hey, all bets are off. If it comes down, if it's not able to form this cup without coming down over the past week or so's lows there, then it gets stopped out at 61.85. Not a big deal. Okay, so let's take a look at the other one. Let's see. The other one on the triggered trades here is JD. Let's see how that looks this morning. JD. Oh yeah. Huh, interesting. So the trigger on JD, and when you see it on the trigger trades list, that means that yesterday it closed above the trigger. So theoretically, the best way, I won't say the best way, the easiest way, the way that it was originally intended is today it opens over the trigger and you get in. And so, your entry'd be up here at, let's see, what was the open price, 29.62. I was looking at this chart this morning, and I mean, this looks wild, right? I mean, look at this price action here. This is just some crazy price. You got this big gap down and this big, sort of sell off and reversal day. Then I'm thinking this was earnings right here. I'm not positive about that. I don't know if that was an earnings gap or that was an earnings gap. I mean, because there's been so many gaps or whatever. And so this is like really a sort of a hectic looking chart, right? No trend, nothing to it, just a bunch of chop up and down. Stop way down here around this pivot low reversal. But here's what's interesting about it. You zoom out on this. Let's zoom out on the chart here. I don't even remember what this line is about up here, but you know what? I'm gonna pull that line just for the fun of it down to here because when you zoom out on this chart, it looks like you got sort of a big cup and handle work in here, right? It actually it actually looks, of course it's really volatile right here, and so with this recent price action, but bigger scheme of things, you have sort of a big I guess you could call that, this is like a rounding bottom, right? And it had been selling off, late last year. I can zoom out even further, but I got stuff marked on here from way back when. Anyway, not a bad looking chart, if you ask me. I don't know where. I guess this would be like right here. I would. This is more. This is probably one of those charts where I draw like a zone or whatever. But anyway, the point of it is this is a nice sort of rounding bottom, and you got sort of. You had a real nice tight consolidation here, and then a lot of noise here recently, but it is what it is. And so this is the kind of stock that if this thing gets something going to the upside, obviously there's some resistance up here. Let's see what's the target on that. 31.85. Well, that's interesting. The target just happens to be, let me mark this on here. Sometimes it's a little tricky to get these things exactly where you want them on these charts. So let's see. 31.85. That's close enough. So I always mark the target on my chart as like a dark green, and then as long as I'm here, I'll just actually mark it. Target 31.85. So there we go. All right, so let me zoom out on this chart again, and It looks fairly reasonable, honestly. It looks fairly reasonable to me, and kind of a nice pattern. What I sort of like about this one is that this day, these couple of days were kind of an anomaly, but the fact that the stop is way down here by that pivot low. And so, I mean, another thing I've noticed recently is that it seems like the stocks that have what looks like a wider stop. Notice that this particular stop is like at the bottom of the most recent sell-off pattern, as opposed to the one we were looking at, Hess, where the stop is not at the bottom of the pattern, right? And I've noticed that some of them where the stop is like seems like it's at the bottom of the pattern anyway. It tends to give them a little more wiggle room, and obviously, if you're using small position sizes, that's a pretty big percent. I can just tell by looking at it that that's a huge percent swing. But look over here, 3.7% is the average range on JD, and that's calculated over a month's period of time, right? And so this is a pretty darn volatile stock. And you can see it's having a good day right here. And so even though it triggered a little bit over the entry here, so far so good on this. Looking fairly decent. So all right, so let's see what else. So there's a couple that have just triggered today. Let's go to the open trades. Look at a few of these just for the fun of it. I didn't really bring any sort of agenda today other than just winging it since I'm solo here. But I figured I'd come on, do a quick show, look at some of this stuff, and then just sort of wing it. So let's see. Next on the list is NGL. Let's see what NGL looks like. And these I'm just going by the most recent. Just going down the list of. And by the way, like the open trades list has shrunk considerably. Lots of small, sort of reasonable, manageable stop outs lately. The funny thing about looking at the closed trades is, I see these strings of stop outs, which we've seen in the past, and then when the market starts to cooperate a little bit more, we will see, lots of strings of gainers, right? Lots of gainers, and so you just got to stick with the system, stick with the strategy, and there's nothing like a market pullback. And with that combined with earnings season, so earnings season was sort of a mixed bag because the system did actually lock in some pretty decent gains over earnings season, but these market sell-offs, like they weed out the weak stocks. They basically, like, between earnings season and this little market sell-off we've had, everything's gotten sort of weeded out, cleaned up, and so now we're just basically waiting for, not waiting for, but we're at some point we're going to see one of two things: either the bottom drop out, in which case not many stocks, nothing's going to trigger in. Um, but hey, some of the open trades are kind of what I focus on because stock gets stopped out for a couple of percent. It's water under the bridge. There was a couple of like 6% stop outs, and those are, to some people, 6% stop out is like nothing, right? And for those to be the one sort of saving grace is that the stop outs are tend to be minuscule. They tend to be really small, and of course, if you're kind of using, and we've mentioned like the turtle traders, and we've mentioned small position sizing, manageable position sizing, and so I mean if you're risking, 0.5%, 1%, under 2% of your portfolio on a trade, and a 6% stop out is like a mosquito bite, right? And so then that's how it's supposed to be, right? Because what we're looking for and so the cool thing is that even though there's lots of there's nothing worse than like death by a thousand cuts when you take a bunch of stop outs. But if you keep at it, what you'll find is that you're holding some of the stocks that stay on the open trades that are doing pretty good. So still drinking my coffee here, trying to wake up. Got up a little bit late today, and I didn't get to my computer until after the retail sales number came out. And so I fired everything up, and I was like, "Why is the market down, so much?" I figured it was something, trade war related news, but it was retail sales came in weak. Look at this. This is interesting. This was kind of well, this is one that this, we've talked about this before. This is like a previous trade. Crazy, crazy like up move last time. And and then there's where the trailing stop got moved up to eventually. That's pretty interesting, really. But so anyways, hey, the only thing about these limited partnerships is, I mean, the system that can't really differentiate between, what kind of company it is or whatever. I mean, everything's just treated as a ticker symbol, as a stock. It's all driven by data. So limited partnerships often come with K1s that you have to worry about. So and they also tend to come with big fat dividends too, just for the fun of it. Um, just for the fun of it, I'm gonna pop over to Finviz on my other computer, and I'm gonna see what kind of dividend this thing pays. Oh, let's see. Dividend yield 10.89%. Wow. Almost 11%. So, hey, there's always the idea that you can think outside the box here, and you look at this and you say, "Wow, there's a stock that, and maybe you'd never heard of these guys before, and seeing it come through the system here puts it on your radar." And you do a little digging. Now, I don't know anything about the fundamentals of this company, but I do know that these limited partnerships, because otherwise I wouldn't have brought it up, but limited partnerships, energy limited partnerships pay dividends, right? MLPs or whatever. So that's a pretty strong dividend, 11%. So maybe the idea is that, you bought some or you buy some or whatever, and you sort of manage, part of it as a trade, and maybe you decide that you're going to hang on to some, right, and collect that big dividend. Now, I would still, I'd still like, stick to the plan, stick to the stops and the strategy, but that doesn't mean that you can't hang on to some shares, right? I mean, you could kind of swing trade your way to a decent cost basis, and then hang on to some shares and tuck them away for a longer term type of investment. Maybe put your stop at just whatever your break even cost basis would be on how many shares you got. But that's kind of interesting just to see a huge dividend like that. And let's see what's next on the list here. NGL APPN. I'm going down the open trades list based on the most recent stocks that have triggered. This is an interesting one. Another thing that I wanted to point out, we're kind of in a weird spot now because a lot of stocks have had earnings recently, and so I'm seeing a lot of this too. Like this is a stock that zoom out on this. Yeah, this is kind of all over the map, but it looks to me like yeah, there's a pretty decent little setup here, and then earnings most likely came out between here and there. I would almost guarantee it. and and so sometimes you get a stock that like has a big drop on earnings and then just kind of battles its way back. So this is kind of hanging in here. The thing about it is you got this day where it closed way over the trigger, and then the next morning gap down, and and basically like sliced through the trigger. So the entry on this could have been when you would have seen a gap down like that, and of course Monday, the whole market was down, and so whether one would have bought this at the open or kind of held on to see, or or avoided it altogether, sort of just based on market action. I mean, that's always a an option. Is that at certain times, based on what you're seeing the market doing. Now today, today's one of those sort of interesting days because we're getting a pretty decent rally here off of a gap down. Um, Anyhow, looking okay. I mean, and like we talked about last week, quite frankly, this the stock is literally about to hit the trigger price again, and so this is completely valid, right? So, I mean, this is still, there's if one were to like wait a day or two after a stock triggered, see if they can get it at the trigger price or just, hold off and see what happens. I mean, the biggest problem is that sometimes you get a stock that just takes off. But so anyway, it's sort of hanging in there, not looking too bad. The next one is USAC. See what this one looks like. Oh yeah, this is actually kind of an interesting case. Let's take a longer. I like to kind of zoom out on the charts, just see what they look like. Wow, this is kind of interesting. Big huge run up, nice pullback, perfect pivot low day right here. Perfect pivot low day, and then it starts to come up, and looks like the trigger was like sort of just over like the highs that it made here. But anyway, the weird thing about this is that this day, of course, it closed considerably over the trigger, and then the next morning gapped up, right? Which we've talked about here, and I know Jeffrey's mentioned that you get a run up and then a gap up like that. I mean, typically, like if you were in something like that, you'd want to consider about taking some off the table. So this would have been one of those cases where actually setting a buy at the trigger price would have worked pretty well. Um, Market's been a little sketchy, and so that would have been that may have felt like something that was may have felt risky. There's nothing wrong with standing aside, and but I mean you got to participate, because if you don't, then you're going to miss all of a sudden when the thing just takes off and doesn't look back. In market conditions like this, you can play around with smaller position sizes, be a little bit pickier and choosier, maybe have less open positions. And of course, a lot of just randomly, a lot of the open trades recently have been closed either by small stop outs or earnings, and so one would theoretically be a little bit cash heavy and looking for opportunities. And really, I mean, that's the system is designed so that you get a stock that's in a nice uptrend. It has a decent pullback and starts to turn around, and that's where we jump on board. So this is uh, this is kind of a weird looking chart to me, but yeah, so far so good, right? I would say that if you get a close way past, considerably past the trigger like this, and I mean that's not really that much, because you can see the increments over here, 10 cents. But a day like that, the idea would probably, and just by looking at the chart, I mean some charts you get a close considerably past the trigger, the next day you get a gap and a go, right, and just another big long range day up. But so this one's looking okay. Let's see. Move on to the next one. THS. This is what I was talking about a couple of minutes ago. Big earnings moved down, kind of bottomed out here, starting to come back. It looks like it's hanging in there. It doesn't look too bad. This one's kind of nice because the day that it showed up on the triggered list, just barely closed over the trigger, right? Close that day was 58.34, so it was just barely over the trigger. Next day gapped down a little bit, and so yeah, I mean even today, right, 58 and a quarter, and so the past 4 days it's actually traded at the trigger price. Um, it's a pretty good low right there too, right? It's like it's at the low of the pattern, and so yeah, stocks there's a nice sort of longer term uptrend. Looks like the last few times that it's kind of sold off, it's managed to climb back. So I kind of like the look of that one. Let's take a look and see. I did this up on my other screen, but I want to show you how I do this. Like on my other screen, so to easily figure out, what the percentage we're looking at is, I just go up here and I type in THS. Whoops, THS. There we go. Just type it in the search and it isolates just that particular stock. And so it makes it real super easy to like sort of zoom in on that. And so again, I would just go to the calculators page over here and I'd find the price differential calculator, type in the entry 58.25 and the stop 55.25, 5.1. That's fairly reasonable. Fairly reasonable. 5.1%. Basically from the entry, like kind of where it's trading now, down to the stop, which is basically at the bottom of this pattern. And so longer term, one of two things happens. Like this thing rolls back over, and I mean, hey, I look at these charts and I try and look at similar patterns. Like I'm gonna say that you had a good sell off here and an attempt at a rally, and then there was something crazy happened back here, but that was huge volume. If I look at the volume down here, that was some sort of anomaly type news event. That's like the biggest volume on the chart. And that could have been earnings or something, but it was sort of a 1 day event, and then the stock took off, right? So typically, we've seen a lot of stocks that have these big run-ups ahead of earnings. Earnings comes out, and you get, one of these crazy reactions. Whether sometimes even when the earnings were great, even good, as they say, it was priced in, or the stock got ahead of itself, or who knows. But anyway, this one looks like it has a reasonable possibility of climbing back up, and so the target on this is 61.55, which I hadn't marked on here, but so there you go, 61.55. Might as well mark that real quick here. And yeah, it looks fairly reasonable actually. There we go. And of course, this is one of those companies that's I mean, it's not a speculative biotech stock. This is a pretty established company, and the stock's done fairly well. Wow, look at that. Huh, that's interesting. Yeah, I mean, whatever was happening back in 2017 is most likely no longer relevant, and so what we're looking for basically is just short-term trades, right? I mean, short-term. We're looking for this thing to sort of work its way back up towards into this crazy sell-off day here. So doesn't look totally unreasonable. The funny thing is that like the entire trade is sort of contained, pretty much contained within like the reaction over earnings. Kind of weird. Let's see what the next one looks like. Maybe it'll look a bit better. Doesn't look too bad. Oh wow. Well, this is an interesting one. Geez, Bank Columbia, right? I always get a little. That's pretty. I mean, it's a pretty nice run that this thing had since January. Of course, everything had a decent run since January. Pull back and an attempt at a bounce, and look at this. It You're going to see a lot of this because on Monday, I mean, the overall market just took a big, took a big down leg, and so the financials got whacked. And so when I look at this, it just sort of looks like kind of like what the market did this week. Interestingly enough, this thing's just sort of do or die time for this. I look at these foreign, and I've seen some of the foreign stocks on here before. I tend to pass those by, honestly. Water, WTTR, Select Energy Services. I don't know anything about this company, but it's not a bad looking chart at all. Huh. So the trigger, let's see, the trigger here would have been 11:55. Well, let me go back to the open trades here. I just want to make sure the date on this one. So yeah, I'm going down this list here. There you go. WTTR. So the trigger date was 5/9. So we go over here, and yeah, so it was 5/9. So this particular day, it closed right above the trigger there. It closed a penny over the trigger that day. This is an interesting one because the trigger and the stop are essentially sort of contained. See, that stop I already have marked on here, 1080, which is basically it's like the high and the low of that day, essentially. And yeah, and here's another one where closed above the trigger, and so the next morning it was valid, but it opened below the trigger. And it's hard to tell whether it opened, and I could look at an intraday chart, but it doesn't really matter. So it opened below the trigger, and so whether it went up first and then down, or whether it sold off and rallied and then closed here, doesn't really matter. Um, the idea would have been that the entry on this would have been right here, somewhere right there above the trigger price, right? And so you can see, even as we speak right now, there it is trading, right around the trigger price. So completely valid, completely valid. And I marked a lot of stuff on here, but quite frankly, it's kind of a decent looking pattern. I mean, look at nice uptrend, reasonable sort of pullback. Um, Stop right down near the bottom of the pattern, and it kind of has like this little flat top breakout look to it. So one of two things happens, obviously, is it's either able to get some traction going here, and there we go. I wanted to draw a decent little trend line there. Decent little sort of trend line break happening, and so hey, it's sort of, and of course, these are 25-cent increments here, and so this stock, other than like recently here, these are kind of some long range days, but this stock tends not to. So the stop on this is kind of a low price stock, so not a bad look to it. So continue on. Foot Locker. Oh wow, check it out. Foot Locker. I don't even have this latest trade marked on here. So I got a lot of stuff marked on here. So yeah, we had Foot Locker. We had a decent trade on back in March here, right? There was the trigger, ran up to the target, pulled all the way back. Excuse me. The last trade was kind of interesting because that pullback didn't hit the stop. The stop continued to trail up, and then finally, hit it there. So, of course, keep in mind that, and I know you guys know this, but if they hit the target, it doesn't close the trade. Trade got closed right here when it hit the trailing stop. So anyway, so now it's had a fairly significant pullback since then, and the system is saying that there's another reasonable attempt at it. So now let's see, Foot Locker trigger price 56.55. So that would have been, and that was on 5/9, which was last Thursday. So 56.55 is going to put you, right about there. Sort of hanging in there. The next day, obviously, opened above the trigger there. Whoops. Sometimes when I zoom in on these charts, it makes it a little more difficult to draw stuff and have it stay there. But this one did pretty good last time, so uh, I'm gonna go ahead and mark this up just so I have it on the chart. Sometimes, like over the weekends, sometimes this particular past weekend, I had a bunch of stuff going on, so I didn't get every single chart marked up. But let's see what the stop is on this. 53.10. That's gonna be down here. 53.10 seems like a reasonable spot. So there you go. And that's the initial stop. 53.10. And again, just so and this is interesting because I had and I'm not sure why I have this line right here, right? Like I didn't just draw this horizontal line based on that low. It was like already on my chart from something that I drew previously, and it's amazing to see, like, basically this is the pivot low after this pullback, right? I mean, it's the pivot low, right? And so get a little consolidation here. Um, just to sort of go over this again, typically what I like to do, and not that it matters all that much, but I always like to see, between the entry price and between the entry price, which is 56.55, and the initial stop, which is 53.10, I like to see what kind of percentage stop we're looking at. So that's a 6.1. Yeah, I've noticed from the close trades, the ones that hit the stop, that 6% tends to be like at the higher end of the range, right? And of course it's based on, obviously it's based on a lot of things, but part of it is that it's based on at the average true range over a month, the volatility of the individual stock. So still sort of hanging in there, right? Um, and here's the other thing is that, you can always, like I say, always go back and think about maybe getting in, if it hits the trigger on the way up from here, right? And that's one way to play it. Or you could say, well, hey, if I jumped in this thing right here, even though it's below the trigger, I mean, it's still a valid open trade. If you jumped in right here, then your stop would be, instead of being 6.1%, with the current price at 55.96, I'm just thinking out loud here. You'd only be looking at a 5.1% stop. So this price differential calculator is like, I use this thing so much. It's one of the handiest tools ever, and I'll show you why. Right? Suppose I wanted to figure out, what kind of pullback we've just witnessed here in the S&P. I like to use the all-time high, and so I pull this up. I pull my chart up, and so the high here is 29.54.13. So I put in 29.54.13, and this low, I didn't want to look at the current price, I want to look at the low, 28.01.43. Put that in here, 28.01.43. So if anybody asks you, what's the market doing, you could say, well, we just had a 5% dip, right? And the funny thing about that, and so this recent dip from high to low, from intraday high to intraday low, minus 5.1%, which is sort of what they call a garden variety, run of the mill, we'd be looking for a 5% correction or whatever, and just so happens that this 5.1%, just rounded off the 5% correction, took it right to 2800, which was major support. And today's actually a little bit sort of constructive, because because now we're getting a little consolidation here, right? We got a couple of days of consolidation. So depending on what happens over the next couple of days, um, got a pretty good level to work with here, right? Like Monday's low is sort of the between Monday's low and these lows here is going to sort of tell the tale, right? If, if the market's as strong as it has been, since the beginning of the year, and this was the 5% dip everyone was waiting to buy. It's funny about that because, I mean, literally, like, over the past, since I'd say since March, right? And especially like, this last little sort of run up here, um, it didn't seem like there was anything that could bring this market down. I mean, the complacency and just sort of that that month long sort of these little narrow range drift higher just didn't seem like anything could ruin the party, right? There was nothing on the horizon. And then lo and behold, that's typically when, when you can't think of anything that could go wrong. And when it seems like the market goes up, it felt like the market just goes up every day, right? That was sort of where we were at. But anyway, then, like I said at the beginning of the show, Fed Day reversal, 5% sell off, and so it's going to get interesting here because we had sort of the shakeout. It got a little scary on Monday. Was a big gap down. I mean, that was the gap down between Friday's close and Monday's open was significant, and then to get further selling, but boy, they really supported this thing at 2,800, right? And we got down at 2,801, and then that's right where it bottomed out and started reversing, and so so this could be just sort of the little pause that refreshes and then we rally back up. And so if that happens, like if we're going to start a new rally up here, what'll happen is we'll get a bunch of stocks that trigger in and we'll be along for the ride. And so I would say I don't know what's going to happen, but I would say to proceed cautiously because at this point, the one thing that you don't want to do is assume that the worst is over and go like sort of whole hog here, and so we just have to sort of play it by ear. So now let's see here. What was I looking at? Oh, I was looking at I think it was Foot Locker. That was the last one. So anyway, you can do the same sort of thing that I'm doing here. You can go down the list and sort of look at the. I wanted to look at the one last stock, and I'm going to wrap this up. I was only planning on doing like a real quick, maybe 30-minute show, but this is what I do. I sit here and look at charts all day, and um, just for the fun of it, I decided that right now this is the biggest gainer on the open trades list. so So I figured I'd pull that up just for the fun of it. Yeah, we can see. See, here's the thing: is that we go down the open trades list, and that's where the open trades list has shrunk a lot, but that's where the stocks that are continuing to do well and perform stay. And so here you go. The trailing stop on this right now, and I didn't have all the trailing stops marked up on this one because it's kind of I had been following this though because I typically paste the list of all the open trades into my Thinkorswim just so I can sort of monitor them on a day by day basis. And these couple of days here, these few days actually, this thing was up huge. And I don't know, it wouldn't have been earnings because obviously we don't hold a stock over earnings, so had to be some sort of news going on or whatever. But this is pretty high momentum stock, right? It's had this might have been the earnings, and so that's why some of these other charts we look at, you see like the stock was going along great, and then had like an earnings gap down. Sometimes that earnings gap down is just an opportunity. It starts climbing again and never looks back, right? So this is one of those cases, and so keep that in mind when you do see some of the other ones that look like maybe you think, hey, this thing gapped down on earnings, so it's it doesn't really have much of a chance of taking off in the opposite direction. Honestly, you see that a lot. You'll see stocks gap down on earnings and then sort of rebuild themselves from that spot. And conversely, like I mentioned last week, you see stocks that gap up on earnings and never look back. So anyway, here's an example of one where it's worked out pretty good. So, wow, that hour went quick. I don't want to sit here and babble too long, and so I say, hey, keep an open mind. We looked at the two, both of the ones that triggered in today. I think look pretty reasonable, right? Hess looking pretty reasonable. Um, traded below and through the trigger price today. Oh, and that was one last thing I wanted to mention was so yesterday it triggered in, but today when it opened, it was below the trigger, so you would have wanted to hold off. It's very rare that, but it does happen. It's very rare that a stock will trigger in and then the following day gap down and then go down and never actually trigger. But we did have one of those. As a matter of fact, I just want to point this out to you. I just want to point this out. So this particular day, just so you'll know for future reference, this is really a rare occurrence, but it does happen. So the trigger price was 49.55. This particular day, which was last Friday, it closed above the trigger. So it would have showed up on the triggered today list. Following day, it gaps down, tries to rally a little bit, reverses, and here was the stop. And so it never actually triggered in, right? Like the idea is that, daily close above the trigger, and then the next day we're looking for, an entry above the trigger price. This one never triggered in, and basically just got removed from the list. That's how it works. You won't see that very often. It's very, very sort of rare because typically, when a stock closes above the trigger, um, the next day it trades, at least I've seen ones that the next day just like a little tiny bit above the trigger or whatever. So anyway, that's kind of an anomaly. So decent little consolidation here today. Market's still kind of in you know to me it's in sort of like a normal pullback or whatever. So 2800 seems to be the big level here, so we'll just have to see what happens. But anyways, hey, thanks for tuning in, you guys. It was kind of fun to come on here, and it's like the old days, me doing a solo and just kind of talking about everything. So be careful, play defense, stick to the strategy, and always have something in play because you just never know when you're going to get a big turnaround, or if you're a little risk averse, you can always have fewer positions, take smaller position sizes, and or I mean, as long as you're okay with the stops and getting small nicks as far as the stop outs, then you shouldn't really sweat it because the market goes through these periods and then turns around and things will sort themselves out at some point. So, all right, hey, thanks for tuning in. We will see you guys here next week.